Welcome to the deep dive. Today we're digging into something pretty fascinating, AIFEX's strategic plan. It's multi-phased, definitely ambitious.
Very ambitious. It lays out a really interesting roadmap.
Yeah, and our mission today is basically to unpack this three-phase strategy. AIFEX is trying to do something, well, quite bold.
They're aiming to build a bridge, right,
Okay.
between crypto and traditional capital markets.
Exactly. Two worlds that often feel miles apart. And look, we're working directly from AIFEX's own strategic documents here, so this is their vision, their plan.
Gives us a real insider's perspective on their thinking.
Right. So if you're into finance or just curious about where digital assets might be heading, or maybe you're looking at AIFEX from an investment angle,
Then understanding the strategy is key. It reveals their whole game plan.
yeah, it's about how they plan to operate and maybe even reshape things. Let's get into it. So, phase one, laying the foundation. They start with launching a decentralized application, a DApp. Now, DApp, it still sounds a bit technical for some. What exactly is that and why start there, strategically speaking?
Right. Well, a DApp, a decentralized application, it runs directly on a blockchain. So crucially, there's no central company or server controlling everything.
Okay, no middleman.
Exactly. Think of it like AIFEX is building its own house first, a self-contained world, before they even think about plugging into the bigger city. It's a very deliberate first move.
Building their own house first. I like that analogy.
And the goals for this phase, they're crystal clear and pretty focused on building credibility. First, obviously, attract users, get people using it,
Build a user base. Makes sense.
and generate liquidity. Real money flowing within their own system. But the big one, really, is proving their core tech, the AI-Fi protocol.
That's their AI-driven finance thing.
Yes, exactly. They need to show it works in the real world, that it's secure, and, frankly, that people actually want to use it, that it's attractive.
Okay, prove the concept.
And they've set this huge target, $1 billion USD in total value locked, TVL.
$1 billion. Wow.
Yeah, $1 billion in TVL inside the DApp. And that number isn't just plucked out of thin air. It's specifically chosen to make traditional financial institutions
Big players, the banks.
sit up and take notice later on. It shows they can handle serious volume, serious assets decentrally. It's about building that proof, that credibility.
$1 billion as a starting point is...
Well, it's a massive statement, almost forcing the traditional world to look. But why the DApp route specifically? Why not just launch an exchange like many crypto projects do?
That's a great question, and it gets to the heart of their strategy. It seems really clever, actually.
How so?
By starting with the DApp, AIFEX gets total control over its own environment right from day one. It's like their sovereign territory.
Okay, complete control.
Which means they can gather direct user data, see what works, what doesn't, and fine-tune things. Super valuable. And as we said, it's a tangible proof of concept.
Right, not just a white paper promise. Exactly. It shows the model works, which builds real trust, not just hype. In the crypto space, that's huge. Show, don't tell.
Makes sense. Get something real working first.
And then, by offering potentially good returns and all the blockchain features from the start, they can build up a loyal group of early users.
The initial believers.
Yeah, like setting up a strong base camp, like you said, before trying to climb Everest. They ensure they have a solid foundation, a working model, and a community before they go broader. It's about preparation, having a core that can stand alone.
Okay, that base camp analogy really lands. Build it strong, prove it works, get your early supporters. So phase one complete, hopefully with that billion in TVL. Then phase two, they introduce a centralized exchange, a CEX. What's the shift here?
Right. Phase two is all about expanding outwards, reaching a much wider audience. CEX, a centralized exchange, was what most people are familiar with when they trade crypto. It's more accessible.
More like a traditional trading platform.
Exactly. So the goal here is to bring in external investors, people who maybe aren't comfortable with the tech side of DApps. The objectives are pretty straightforward, really.
Okay, what are they?
Boost liquidity for their main coin, AIFEX. Make it much easier for the average person to buy, sell, and trade it. It's moving from that specialized house they built into a more public marketplace.
Okay, opening the doors wider. But the CEX market is packed. You've got giants like Binance, Coinbase. How does AIFEX possibly plan to compete? What makes their CEX different? It can't just be that they have users from the DApp, surely.
That's the critical point, isn't it? And yeah, simply having DApp users isn't enough on its own, though it helps. Their approach is quite strategic here, building directly on phase one.
Guard.
They don't see their CEX as just another exchange fighting for scraps. It's positioned more as a liquidity magnet and a bridge. The key thing is they're not starting from zero like a typical new exchange.
Because of the DIP users and assets.
Exactly. They're leveraging that existing user base, yes, but more importantly, the assets and the liquidity already proven and locked in the DApp during phase one. That's a massive head start. They're essentially expanding a functioning economy, not building one from scratch.
Okay, that's a significant advantage. So it's not just users, it's the value already there.
Precisely. And having both the DApp where value and yield are generated and the CEX where it can be traded easily gives them what they call full cycle control.
Full cycle.
Meaning they manage the whole journey from creating value with their AI protocol in the DApp right through to providing the marketplace for it on the CEX.
That sounds a bit like Binance with its own token, maybe.
There are parallels, sure.
Yeah.
But AIFEX claims a key difference. Their DApp is designed to pre-build genuine demand for the AIFEX coin before it even hits the CEX for wider trading. The DApp users need and use AIFEX within that ecosystem first.
Ah, so the demand isn't just speculative trading demand, it's built-in utility from the DApp.
That seems to be the idea. Kind of like Amazon building up demand for its own popular products before opening its platform to everyone else. So phase two isn't just about trading fees, although that's part of it. It's about elevating the AIFEX brand, making it look like a serious, comprehensive digital financial hub, turning that internal strength outward.
Okay, using the DIP's success to power the CEX. That's pretty smart. All right, so foundation built, market expanded, phase three. This is the big one, right? The IPO, taking the company public.
Oh yeah, this is the grand finale, the most ambitious part, an initial public offering. And not just anywhere.
They're targeting HKEX in Hong Kong and NASDAQ in the US. I mean, that's huge. It feels like they're trying to rewrite the rule book for crypto companies.
It's definitely a massive leap, a full-scale entry into the traditional global capital markets, something very few crypto-native companies have even attempted, let alone achieved, on Tier 1 exchanges like these.
So what are the goals here, beyond just raising money, I assume?
Well, access to institutional funding is a huge one, obviously. That opens up enormous potential for growth and stability. But it's also about credibility, cementing their image as a legitimate AI financial institution.
Okay.
But here's the truly mind-bending part. Their stated goal, to be the world's first company to have both its crypto coin, AIFEX, and its company shares trading at the same time on major stock exchanges like NASDAQ and HKEX.
Wait, the coin and the stock listed together on NASDAQ?
Simultaneously traded on Tier 1 exchanges. That's the plan.
Yeah.
It's not just ambitious, it's unprecedented. It directly challenges how we separate these asset classes.
Audacious is the word that comes to mind. Okay, but why HKEX and NASDAQ specifically? There must be a strategic reason beyond just the prestige.
Absolutely. It's very calculated. HKEX Hong Kong acts as a vital bridge. It connects capital flows from the East and the West. Positioning themselves there taps into huge, diverse investor pool.
Global crossroads. Got it.
Yeah.
And NASDAQ.
NASDAQ solidifies their identity as a global tech company, an AI company.
Right.
It appeals to a different, but equally important set of investors, particularly in the U.S. tech scene. So it's a dual approach to maximize global reach and legitimacy.
Okay, covering both East and West, finance, and tech profiles.
And crucially, a successful IPO on these regulated exchanges unlocks access to that vast pool of institutional money. We're talking pension funds, hedge funds, sovereign wealth funds.
The big money.
The really big money. Many of these institutions have strict rules that stop them from directly buying crypto assets due to regulation and volatility concerns.
Right, compliance issues.
Exactly. So the IPO provides a regulated, compliant way for them to get exposure to AIFEX's growth. It's like bringing the investment opportunity to them, packaged in a way they can actually buy. Clever way to tap into previously unreachable capital.
Okay, bringing the institutions in through a regulated stock offering makes sense. But how do they square that with the crypto side? How does this dual value assets idea work in practice? It sounds complicated.
It does sound complex, but it's also potentially the most innovative part. It's how they bridge that gap. The dual value assets concept basically means investors get two ways to access the underlying value of AIFEX.
Two doors into the same house?
Sort of. You can invest via the AIFEX coin. That reflects the crypto side, the dynamics, the potential high growth, the decentralized protocol itself, more agility, perhaps higher risk reward.
Okay, the crypto play.
Or you can invest via the stock, the shares. That represents the traditional regulated side, the stability, the governance, the transparency that institutions need. It operates within the familiar rules of the stock market.
So different routes for different investor types.
Exactly. Or even for the same investor wanting different kinds of exposure. They're suggesting this could create a kind of synergy or multiplying power. Imagine combining the innovation speed of crypto with the stability and access of traditional stocks.
Interesting.
A traditional fund might buy the stock because it's a regulated AI finance play. A crypto enthusiast might buy the AIFEEX coin for direct involvement in the protocol's yield. It's genuinely a dual-world listing attempt. Offering different risk profiles, appealing to a much broader spectrum of capital, it's trying to set a new standard for how value is seen and accessed across both worlds.
Wow. Okay, zooming out then. From DApp to CEX to dual listing IPO. Looking at the whole thing, what are the biggest strategic strengths you see in this plan from your expert viewpoint?
Well, looking at it holistically, there are several really strong points. First, that full-stack control we talked about, managing everything from creation in the DApp to trading on the CEX to institutional access via the IPO, that gives them immense control and agility.
Minimizes dependencies.
Yeah. Second, the sequential trust building. It's methodical. Prove it works small, DApp, then expand CEX, then go global and regulated IPO. Each step builds credibility for the next.
Yeah.
It's patient, calculated growth, not just crypto hype.
Builds confidence along the way.
Right. Third, it's designed from the ground up to appeal to both retail crypto users and traditional institutional investors. That's a very wide net, diversifying where their support and capital come from.
Tapping into both worlds.
And fourth, there's a really powerful narrative. Starting as this, AI decentralized finance thing, an AIFEEX protocol, and evolving into a potential global AI financial institution. If they pull this off,
It's more than just one successful company.
oh, much more. It becomes a global case study. It shows how coins and stocks can coexist, maybe even thrive together under the umbrella of major stock exchanges. It could genuinely change how people view digital assets versus traditional finance, setting a new benchmark, really.
A potential paradigm shift. Okay,
Yeah.
that's a compelling upside. But let's be real, a plan this ambitious must have enormous challenges, massive risks. What are the biggest hurdles AIFEEX has to clear?
Absolutely. The challenges are just as significant as the ambition. Huge mountains to climb. Number one, without a doubt, is regulatory compliance.
That seems like a minefield.
It is. Navigating the incredibly complex, constantly shifting regulations in both crypto and traditional finance, especially for a dual IPO on HKEX and NASDAQ, it's monumental. Regulators are still figuring this stuff out, and a hybrid model like this will be under an intense microscope. They'll need top-tier legal navigation.
Okay, regulation is huge. What else?
Market education. They need to explain this completely new hybrid model to two very different groups of investors, crypto natives and traditional finance folks, getting both sides to understand it, believe in it, and invest in it. That's a major communication challenge.
Bridging the knowledge gap.
Exactly. Then there's liquidity management. They have to carefully balance the flow of money and assets between their DApp and their CEX. Keep things smooth, prevent weird price issues, maintain confidence across both platforms. That's technically and financially tricky.
Balancing act.
And finally, maybe the most fundamental one, sustainability of yield. The attractive returns promised by the DApp in Phase 1, they need to prove those are sustainable long-term to keep that crucial initial user base happy and that billion-dollar TVL secure. It can't just be temporary magic. These are deep, strategic, operational tests.
Right. Huge potential, but equally huge hurdles. Okay, so let's try and wrap this up for you, our listener. AIFEEX's plan is essentially a three-act play. Build a strong foundation with their DApp, expand market access with a CEX, and then make a global entrance with a dual IPO on major stock exchanges.
Yeah, and the whole thing is aimed squarely at creating this seamless connection between the crypto world and traditional finance, building that bridge we talked about.
Creating an integrated ecosystem.
And look, for anyone watching the finance space, this is more than just a company's strategy. It's a vision for potentially massive change. If they succeed, AIFEEX won't just be another company. It'll be a landmark case study.
Showing how digital assets and traditional stocks can work together?
Exactly. Thriving together, under regulation, potentially unlocking value in new ways. A true dual-world model.
So it leaves us with a big question, really.
It does. If this integration, merging these two massive financial worlds actually happens, and under the scrutiny of regulators like those overseeing NASDAQ and HKEX, what new standards does that set? What does that mean for the future of finance, for innovation, for how you might invest? What doors does it open? It could really reshape things.